What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at PayPal Holdings, ticker symbol PYPL, on a variety of time frames in anticipation of tomorrow's trading day, Monday, January 29th. Well, PayPal stock on Friday finishing up about a point, 1.76%. This, of course, is the 1 minute chart. Again, we're going to go through all of them, try to get as much context as we possibly can, lay out some bullish and potentially bearish scenarios heading into early this week. And then we'll take a look at some of the commonly overlooked options data to try to gauge sentiment. Sound good? First of all, hey, listen, if you're new here, go ahead and subscribe to the channel if you'd like. If you want future updates, I appreciate it. This is a brand new branch off channel, this Roensch Capital Charts channel. And if you get value out of these videos, please consider leaving a like on the video. It does help out tremendously with the YouTube algorithm, and I greatly appreciate it. So again, here on the 1 minute chart, let's get some intraday context going, at least psychological context. So you can see here a couple of potential opportunities early off the open on Friday, at least for intraday traders, particularly scalpers. And then as we got into mid-morning here, you saw this kind of sloppy upside move, at least sloppy in terms of entering a potential short trade. You may have seen some bears entering a short scalp in this region. For me, it's a little bit sloppy here, so not a lot here for me in terms of setups with statistical edge. So let's move out here to the 5 minute and take a look at some of the more important EMAs. You can see here for the majority of midday and afternoon, this 20 EMA, that purple line, did act as kind of a grind up support level. I'm sure you saw some traders trading off of that level. It eventually broke inside of about 40 minutes before the close here on Friday. But in common intraday trader fashion, if something has predictable edge, we trade it until it breaks, because you end up net positive, correct? If you want to discuss this more in depth in real time, that pinned comment will give you that link there. We'll give you instant access to our free stock market Discord community. We're discussing trading every day in the free server. So let's move on here to the 30-minute chart. This is where we start looking at slightly more like day-to-day macro levels. That's going to be like the 50 period, the 200 period moving averages. And we look at them on a variety of time frames, like the 30-minute, the 4-hour, and the daily, to give us a very well-rounded picture, because as always, as traders, we're looking for as many factors in our favor as possible, both for entries and exits and during each particular trade. So listen here, a few things pop out immediately, right? We have the technical channel from about 60 to about 63. We've had that drawn for a little while, so I'm of course paying attention to that. But in addition, just to be more specific to the 30-minute chart here, this 50 EMA, the 50 period moving average, right? The EMAs were the previous chart. The 50 period moving average, the white line, and the 200 period moving averages, I'm watching those here on the 30 minute on Monday. If you're a bull, I'm going to be looking for that 50 period to hold, allow us a bounce to eventually work our way up on the 30 minute chart to that 200 period, but understand it's almost 3.5% away, somewhat of a substantial move intraday. But we've seen it on PayPal recently. But if you're a bear here on PayPal on the 30-minute chart, you're looking for a downside break off the 50 period moving average, working our way down toward that $60 a share technical level that we've seen respected very recently. Okay, move on here to the 4-hour chart. Now, in similar fashion, if we look here on the 4-hour, you can see that we are currently in a channel in between the 50 period and the 200 period. The gray line is the 200, the white line is the 50. We're kind of in the middle. So listen, if you're bullish on this name, on the 4-hour chart, you're looking for an upside test of the 50 period, that white line, which is currently just above 62, right around 62.20. And you're looking for not only a test, but ideally an upside break, back test, and hold. Okay, that could give us an opportunity to bounce up toward that $63 technical level. But if you're bearish on PayPal here, you can see that downside, that 200 period moving average, right down around $61 a share. Again, you're looking for not only a downside test, but a downside break, ideally retest to the upside, and claim it as resistance, fading off that level, opening up the opportunity to go down and test $60 a share. Zoom out here to the daily chart and take a little look here at the PayPal daily. You can see here we have earnings coming up on February 7th after the market closes. Now listen, a number of things to unpack here on the daily chart. First of all, I'd like to look at the volume. We can see the volume began to pick up right in this region, mid-January, right around January 16th. Okay, and you look here, we're kind of net neutral since that volume pickup, which tells me that the market as a whole, listen here, we saw the highest volume on this pump, but we recently saw a high volume candle on that fade back into this channel on that downside test of 60 and the 200-day moving average. The market as a whole right now, at least as far as volume is concerned, is relatively equally weighted and relatively undecided because we ended up net neutral after a large volume period of time. Now, as far as levels go heading into tomorrow, okay, we have a really interesting scenario here, actually. We should probably zoom in a little bit more and get a really good view of this. This is the 200-day moving average, the 50-day moving average, because we're on the daily chart. The two most popular and they have the most eyeballs indicators across the entire market, basically on any security. That 50 is lining up with that technical level of $60 a share. That 200 is lining up with that technical level of 63 a share. So hey, what does that tell us? We are right in the middle of a highly important channel. Listen, if you're bullish looking at the daily chart, we are right now approximately 1.8, 1.85% from a really big test of not only the 200-day moving average, but also the $63 area. You want to see a hard test of that, a breakthrough retest, claim it as support, and a bounce up out of that hole. If you're bearish, you want the downside of this channel nearly identical on both sides, really big technical and really big indicator levels lining up. And if you're bearish, you want to see a hard downside test of not only that 50-day moving average, but $60 a share, a break downside through, retest, claim it as resistance, and fade downside. Okay, now zoom a little bit back out and take a look here at implied volatility. For context for you options traders and you stockholders, it's important to pay attention to this. Look here, since the beginning of December, we've talked about this recently, right? IV has pumped. It's gone from down around 26, 25, 26%. It went all the way up to 59%, but is now pulled back to approximately 50%. But just understand that when you compare IV to the last approximately month and a half, it is slightly elevated. So right now, even though it's pulled back from 59 to 50, there is some, when you compare it to equilibrium, there is still some elevated IV crush risk. You know, that doesn't shoot an options position like dead in the water, at least buying options, right? But you should always be aware of IV potential risk or potential benefit, because Vega is such an important Greek in the pricing of contracts. It can really, really give you a little bit extra edge, a little bit of an advantage over traders who don't understand it. If you understand how the Greek Vega, which of course is impacted by implied volatility, how that affects your contracts and play it to your advantage, whether you're buying or selling. All right, let's finish up here by taking a look at the options chain and seeing what the traders, are thinking heading into tomorrow, Monday. Good sample size, 330,500 about contracts traded, 330K, right? Over 231,000 of those are calls, about 99,000 of those are puts. Overall call put ratio heavily weighted to the bullish side, but what's the short-term speculation telling us? That 0 to 20 delta, the gambly style, short-dated, out-of-the-money, cheapy calls and puts? In that delta range, 120,600 calls, 46,300 puts. Listen, whether this confirms your bias or not, this is not an opinion now, this is data. Both the overall call-to-put ratio and the short-term speculation call-to-put ratio is leaning heavily to the bullish side here on PayPal from Friday's data heading into this coming week. But as always, as is number one always on any of the Roensch Capital channels, the main channel, this channel, right? Risk management is number one. Risk management, discipline, emotional control is the difference maker. Because just because the overwhelming majority of the masses, the market participants, are saying one thing, they can always be wrong. So utilize this as one factor in your pie and then come to your own conclusion on what your sentiment is. Again, hey, if you get value out of these videos, please subscribe to the channel. I greatly appreciate it. And I'll see you in the next one.